Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Great to see everyone. All right, I see the questions coming through already. So you know what? Let's just jump into the questions. We know that we're dealing. If you checked out the free video back at the Simpler Trading website last night for Thursday, you know that we really dove into the emphasis on staying short, not everything, but specifically the NASDAQ and the Russell, focusing on the fact that if we follow structure, if we trade what we see, we'll usually be on the right side of sentiment and momentum, and focusing on those trends. So with that in mind, of course, this show is always about your questions. So let's just dive in, okay? Good morning, Tim. Bought some IWM, very cool. That's an open trade that we have right now in the mastery. Bought some IWA 18 March 204 puts, 214 moderate entry. So yeah, how would you calculate for those of you that may not have the IWM trade, what are we looking at? Well, we're looking at an overall downtrend. We saw some rallies into the wave, and we saw some rallies into Darvis resistance, and basically bought puts into the correction of the downtrend. That's just one way to take advantage of shorting the rip. So then we have, where are the downside targets? So yeah, let's zoom in a bit here, Tim. And what I'm looking at, and again, these are the automated tops tools. This is Darvis 2.0. And you can get that right over at Countdown Trader. In fact, I would highly recommend getting those indicators, because this will be part of this target conversation. And then when we have our conversation on March 9, I'll tie even more together with how we can use Darvis for entries. So what about for exits? Well, take a look right there. We've got some support right there at the Darvis. And that's one level that I'll be keeping an eye on. That 199.20 area, that could be a really good level to watch, maybe as an optional target. I say optional because there's a couple of things that we do. You know this, Tim, because you're in the mastery, but let me talk a little bit about some management with everybody, regardless of where you are in terms of your trading ideas and management. There are levels that you may not want to scale out at. I can get if someone doesn't want to scale out quite as soon as 199.25. However, since the trade is working in your favor, and at this point, if you've entered a short in this area, and we reach an area like this, that's a pretty nice drop. That's a pretty profitable drop. But let's say you're thinking, well, Raghee, you're also saying we could get down to about 195, and that's true. I am. But if you can at least move to a break-even stop, say an optional target at this area, it helps protect your downside. It helps protect our capital if we're risking only unrealized profits. So that's what I'd be looking at, Tim. Those are the levels that I'd be focused on. Okay. All right. Next up is Jamie asks, hey there, Jamie. Out of my 30 plus years, if I had to choose one, have I been more successful swing trading or day trading? It's interesting. My day trading classes, especially for the past couple of years, have always done exceedingly well. And I'm very grateful for people wanting to learn how to day trade. But if somebody told me, let me answer it a little bit different, Jamie. For me, what's been more profitable longer term? Look, I can day trade and take advantage of smaller moves on a shorter interval, right? We can all do that. Take advantage of a move, over the course of a day of 3, 4, 5 points. But when you have a longer term approach and you could take advantage of a move of 20, 30, 40 points, There's a couple reasons where if someone said, Rog, I can only do one type of trading, what would it be? I'd say embrace longer term time frames, right? Embrace that daily or heck, even weekly. Day trading is very effective, especially when markets go into chop, as they have in many situations on the indices and on the sectors. But if I had to choose one, not only would I pick longer term time frames, I'd likely pick a daily or weekly time frame too, but that puts me more into a position trade. That puts me more into almost an investing type time horizon. So I know for me, look, the one thing, Jamie, that we can actively trade, we can get in, get out. Sometimes we can even delude ourselves into thinking we're going to find the highs and lows of everything. You all know we won't. However, the one thing you cannot um, replace is time. It's kind of actually it's very much like that saying of when's the best time to plant a tree? Yeah, 50 years ago. When's the next best time? Now. So if I can use time, that's gonna almost always just outdo from an effort standpoint, because day trading is a lot of effort too. I love having it in my wheelhouse. But if someone said, Rog, this is what I'm going to do, I'd tell them to start off with that daily. So longer term time frames, longer term time horizons. Cool question. Thanks, Jamie. All right. Next up is Larry. Good morning, Raghee. Which oil producer would I recommend? Well, first of all, for those of you wondering, why would Larry want to know oil producers? Crude's heading higher. It's pulling back. We want to continue to take advantage of pullbacks in crude. I don't want to pick one in this environment. I'm not going to think that I'm smart enough to say, well, this is the company that's going to do well in this environment. We have geopolitical tensions. We're getting a pullback in crude. We have an inflation narrative. I'd rather bet on the tide, not a boat. So, Larry, I think the answer is sort of, and if you've been following the show, you know what I mean. All of them, right? If I can get a pullback on the likes of XLE, XOP, OIH, I'd rather go that tide route, that broader sector route, or a heavily weighted stock within that ETF as a proxy for the ETF. So that would, bring me to Exxon or Chevron. That would take me to Schlumberger or Halliburton. But I'd rather go broadly. I don't want to try to pick a winner, especially in this environment. Let's pick the team, right? Rather than a player, let's pick the team. So that's where my head's at right now. Now, if that changes, I'm sure it'll come up in a video or a breakdown. But right now, let's stick with the markets that are bullish momentum, bullish trend, and the ones that are tracking with crude and RBOB most. Remember, if we do wander into XOP, we're also exposed a bit to natty gas. XOP has more influence of natty gas than say OIH or XLE would. Okay, so thanks for the question. And I saw you add for longer term. Same thing. Longer term means I'm focused on the daily. Same answer, my friend. I'm either day trading or I'm swing trading a daily time frame. And swing, look, there's so many definitions for swing. So at least for our purposes here, for the 20 minutes that we're together for charts and coffee, or anytime I'm in the rooms, when I refer to swing trading, I'm not referring to whatever the 3 to 5 day or whatever that time horizon based definition is. I just think that's not really useful. Swing trading is trend following within the context of a trend. Trend following entries, right? I emphasize within the context of a trend. So if I'm going to swing trade to the downside, it's going to be a downtrend that's ripped up into the wave. If I'm going to be swing trading to the upside, it's going to be a pullback into the wave. The swing is synonymous with the retracement, and retracement for me is really applicable most powerfully within the context of a trend. So that's almost always going to be a daily if I'm looking at a longer time horizon. Horizon meaning what? Time frame. What does each candle represent on the chart? What's the interval? Time horizon. What do I expect, suspect? What am I prepared to do in terms of hold time? Okay. All right. Next up is What are my views on Euro US? Mark, if you've been following my analysis for some time, I'm short. And not only is that my opinion, I'm short. So I'm short because, well, the 115 handle on the forex and on the 6E. So let's say you don't play Euro US forex, and you're looking at an alternative to the euro. 6E is fine. That 115 handle on them both, Mark, I've been watching that. That's where I'm short from. That's where I'm short from. So my take, Mark, on the euro is its inverse or negative correlation to the US dollar. That is the most steady inverse correlation in any market. By the way, the euro is the largest market of any kind on the planet, the forex anyway. And so if we're seeing higher interest rates in the US, yeah, I'm going to expect the US dollar to strengthen. So I want to find the weakest currency possible. And by the way, in the macro market deep dive video that I did last night, I talked about, hey, where is the strength and weakness? Another way to play that dollar strength right now, especially with the weakness in equities, Mark, I'd also keep an eye on maybe 6A. I'd also maybe keep an eye on Aussie US. I know it doesn't look structurally like a downtrend, but I think we could fade the Aussie and the New Zealand dollar as we have short faded the Euro US. And again, the common denominator of all that is the US dollar buy. It's a US dollar buy. So am I looking over the coming month? I'm looking for as long as the market continues to discount the rate hikes that are coming, right? So as long as that's part of the conversation, that should keep the US dollar strong against, preferably that contrast that we always need to keep in mind when we're currency trading against weaker currencies. So thanks for the question. All right, next up, any thoughts on the S&P? Well, S&P has yet to go red momentum, red trend, bearish momentum, bearish trend. So Philip, I'm already short QQQ. We're already short NQ. We're already short YN. WM RTY futures. However you wanted to go into that, but take a look at the structure at the very bottom. See, it's red over red. That's momentum. That's trend. So if that's what we're dealing with at the moment, that's where my emphasis is going to be. But to your point about the S&P, this is where it gets really interesting. XLK is the number one weighted sector within the NASDAQ, number one weighted sector, heaviest weighted sector within the S&P, and then number two in the Dow. As sectors go, they don't get any more important than the XLK for its breadth of influence. So this is Microsoft, this is Apple, right? So if I am looking at, Philip, if I'm looking at S&P and I'm seeing the NASDAQ move lower and I'm seeing the XLK move lower, I think the S&P, SPY, ES, SPX does follow suit. But this, and thank you, I appreciate that. Love SSM. I love you all back. I absolutely adore our members, the vibe, the positivity. Y'all are great. I can't take any credit for that. I see you all working together and supporting each other, and I'm just so impressed by that room, by that community. So look, on the flip side, S&P also has exposure to financials, which by and large I'm bullish, and has exposure to healthcare. When it comes to the S&P, Philip, look, sector secret, the sector secret, it's not such a secret. Understand the weighting at the sector level, at the stock level, and don't necessarily buy into, well, the broader indices are doing this. Don't paint the markets with a broad brush, especially within CHOP. In an uptrend, broad brush away. But in what we're dealing with right now, which, by the way, these are normal markets, gang. 2020, completely abnormal. Most of 2021, say the first 6 to 8 months, that's not normal, right? What we're dealing with now if you were to ask any trader who's been at this, and I'm sure some of you have been too, for 10, 20, well, maybe not 10, 15, 20, 20, 25, 30 years, they'll tell you this is what markets do, right? We don't always get the rocket fuel of the most insanely accommodative monetary policy for the better part of 10 years, right? So this is kind of normal, but this is okay. That's all right. Because once you understand, and I know you do, once you understand how to prioritize the high concentration weighting of the sectors within the indices, and then the stocks within the sectors, and even the stocks within the indices, your ability to watch list build, and no exaggeration, this is not hyperbole, becomes elite. You're just going to be a better watch list builder, right, than the average trader who's just trading whatever everyone else is talking about, and then wondering, why their results are hit or miss. So, to your point, I would probably say, if we're going to short something, am I going to short the SPY? No, I don't want to buy it. I don't want to buy it. But I think shorting XLK, shorting XLV might be a better bet. And then if rates are going higher, this is still a choppy market, this XLF. And I'll tell you what, we'll probably end up possibly long XLF, or at very least, if we're not going to go long the tide, we might get long some of the individual boats. All right. And hey, just a heads up, I love 3-day weekends. I love them. So we're about 2 weeks out from that March 9 webinar. And if you haven't already, headed on over to Countdown Trader and grab those free indicators. If you haven't already gone to the options room, futures room, my mastery, or even the day trading room and grabbed the tops free layout, my foundational layout that I've been using in some form or fashion. This is the best version of it because we've automated so much of it. But if you haven't downloaded it, please do. Get visually comfortable with it. And heck, if you use Squeeze, if you use Ready, Aim, Fire, if you use the 10X labels, what other premium indicators you might already have from Simpler, view them through the prism of the JT trend flags. View them through the prism of the wave and the grab, and you're going to see the accuracy starts to go up. And then we're going to tie that all together on the 9th, and you'll see how to supercharge everything. And I don't mean that in a dramatic way. You're going to learn how to supercharge everything that you already know to do, because you're going to have better accuracy with the application of those strategies and those indicators. So that's on March 9th. So you still have a little time to go grab those indicators, set them up, and get ready. So this weekend, I'm going to work on my notes again. We had a really great feedback on the weekly notes, which I've always done for myself. We're going to work on those, start working on those watch lists. Use the weekend, gang, while everyone else is having some wine spritzer by the pool. Kick butt. You'll be ready on Tuesday. We are going to have charts and coffee on Monday, and I'll share a little bit of my weekly watch list work with you all. Okay. So we definitely will be together on Monday, 9 a.m. So Philip, short SPY, maybe not. Let's stick with the Qs. Let's stick with the NASDAQ. Let's stick with tech. Let's focus on healthcare, XLK. But remember, XLF could be that sort of anomaly within the S&P that we might be long in. So why not we get specific to the sector? Yeah. All right. Next up is, William, I am perfectly okay buying this pullback in crude. I've been talking for a few days about this, and it doesn't mean that if everyone watched the video here, I was looking at crude here, but that's aggro, right? And we know that this thing could keep moving lower. Hey, now we're in the wave. This is really the reversion. We talk about reversions to the mean. There's no generally there's no mean. There's no mean that's the only mean, right? For me, the 34 EMA wave is that mean, is that correction, right? It also starts at the 21, right? But we can have even an aggressive 13, right? But this is the sweet spot, this area between the 34 EMA high to low. And this is where we're at. Now we're in the conservative zone. Now we start thinking about how can I deploy the remainder of my budget in the USO. Are we getting a pullback in the XLE? Is OIH pulling back? Do we have a move in XOP? This is all related to what's going on crude futures. So this is my reversion to the mean. You see a blue grab candle, we've reverted to the mean within the context of an uptrend. So you notice that the structure gives this blue grab candle meaning, right? The colors in and of themselves, while helpful, green is bullish, blue is neutral, red is bearish, the colors in and of themselves aren't the whole story. Are we getting a blue grab candle within the context of a trend? That we are. We are finally in the conservative reversion to the mean zone. And I mean, look how easy that is to recognize. Blue grab candle, the lines are already there. We have a nice volume ledge sitting there as well. There's a lot to like about this pullback. There really is. And remember, it's going to feel strange buying pullbacks. Everyone talks about buying the dip until the dip comes. Most people are far more comfortable buying into strength. But if you know where the floor is, or at least where it's more likely to be, because of course it's all probability, it's not certainty, right? The overall approach is, hey, how do we take advantage of this pullback? Or should we even, right? Structure is the answer. Next question. Hey there, Peter. Can we get the HPMR and Darvis 3.0 from the futures room? The Darvis 3.0, Peter, is a premium tool that typically comes with classes or my bundle. So no, the 3.0 is a premium, which is that just means paid for. 2.0 is free. Darvis 3.0 is also known as the Darvis signals indicator. HPMR. So I have an HPMR pack that includes the S&P futures, NASDAQ futures, Dow, Russell, crude, gold futures in the futures room. Yes, and then we have that pack also in the Sector Secrets Mastery, along with the relevant ETFs. So we have 2 packs in the Mastery, the futures pack in the futures room. All right, so yes, you can download the HPMR, but Darvis is a premium tool. But again, use the 2.0. The lines are the same. The main difference is the signals. You get that Darvis pattern signal built into Darvis 3.0. All right, so moving on. Am I in for the close the futures room today? William, I think I'm going to be doing the close in the futures room and the options room today. So if you're in the options room, I'll see you all at 3 o'clock for the Ask Me Anything session from 3 to 4. Yeah, I will be in there today for the close, I believe, in the options and in the futures room. And then it's a great time for general questions, tech questions, settings questions. It's a Friday afternoon. It's 60 minutes before the bell. It's a perfect time to sort of put a bow on the day. All right. So with that in mind, gang, we wrap it up. As always, thank you for being a part of the Charts and Coffee Morning Show. Thanks for dominating and caffeinating with me. Can we put these indicators on TradingView, Randy? Yes. If you go into TradingView real quick, search simpler. There we go. And you'll see the Darvis 2.0, my grab candles and the wave and the propulsion are all unlocked. So yes, you can add those to your TradingView layout. All right. Be good to each other. Have a great weekend. Enjoy it. Unplug for a little while. I will see you Monday. All right. Monday, 9 a.m. Until then.